What is up, people? Miles here with Keep the Change, and today we are doing something a little special. We're looking at my portfolio. We did this a couple months back, but way less people were watching the channel, so I figured we'd do a little update. Just for some context on the portfolio, it's not like I magically had 15,000 just laying around. I've been investing consistently for months, years at a time, so keep that in mind. So if you appreciate the transparency of this video, go ahead and leave a like, and if you want to see more videos from me, I upload videos every Tuesday and every Friday on stock, so make sure to subscribe. Now with all that out of the way, let's actually get into the portfolio and see what I have. Looking at the first stock, an extremely small percentage of my portfolio, only at 0.42%, I have Intuit, and I have 0.18 shares, a market value of $66. I bought in at $313, now the stock price is $368, so I'm actually up 17% or around $10. Intuit's basically an accounting company, a tax company, so they own TurboTax, they own QuickBooks, a bunch of different softwares, they own Credit Karma as well. And I think it's a really good business. They even managed to grow revenue in 2008 during the financial crisis. So that just shows you the resiliency of this business model. And for me personally, I bought in at 300. I just bought a little bit because I thought it would go down, but obviously it has shot up. I do regret not buying more. If I could go back in time, I definitely would scoop up some more shares. However, at this price, it's a little too steep for me. I'm gonna wait for it to dip a little bit. If it hit like 340, 330, I'd probably buy at that price. And the next stock in the portfolio, we got Chegg, and I'm actually a Chegg user myself. Basically, it's an online tool / app for college students, high school students, students all over. I only have 2 shares. It's worth $151. Portfolio diversity, it makes up around 1% of my portfolio, an average cost of $71, and I am up 6% or $8. Now, this is pretty much chump change, and honestly, I wish I bought more. I am definitely planning on buying more. If it hits 70, I would buy like that. If it hit the 60s, I would scoop up shares like crazy. So yeah, that's basically where I'm at. I mean, great growth stock. I think I'm gonna add it to my portfolio further. Next on the list, we got DMY Technology, or DMYD. Now, I'm very excited for this stock. I talked about it last week in a video. If you want a full analysis, go and check that out. And this is actually a SPAC play, which is really unusual for me. I don't usually do that sort of thing, that type of investing, but this opportunity was just too good to pass up. Basically, they're gonna do a merger with this company called Genius Sports, and Genius Sports gives the data from sports games to sports betting apps like DraftKings or FanDuel. This is an industry I'm extremely bullish on and really excited about, just passionate about it, so I had to scoop up some shares. I have 33 shares here today, $368 worth of value, average cost of $11.36. Portfolio diversity, it's around 2% of my portfolio, and I'm down $7 or 2% on the position. If this goes to the single digits, like $8 or $9, I would definitely pick up some shares with no hesitation, but I'm okay with keeping it where it's at right now. It's more of a speculative type play for me, but tons of potential for it, and I really do believe in its future, so we'll just have to see how it goes, I guess. Now, the next stock on the list, we're switching it up a bit. We were kind of into some growth stocks earlier. Now we're into a value play, and the value play is Lockheed Martin. And Lockheed Martin, all they do basically is sell aircrafts and military personnel to the government. And I like this stock for a lot of reasons. First off, they have a really fair valuation. The PE is like 18 or something, which in this market, extremely fair. Also, the revenues have been growing despite the pandemic, which does make sense because their main customer base is the government. The government will never run out of money, right? But the biggest reason I own this stock is for the dividend. It's around 3%, and I don't have that many dividend stocks in my portfolio, so I wanted to add it in because it's a good value with a good dividend and a great business model. So all good things across the board. I own 1.6 shares. It's worth around $593, average cost of $373, and right now the stock price is $366, so I've actually lost 2% or $10. However, with the dividends accounted, I think I'm about break even. I am looking to build this to like $1,000 position, hopefully get like $30 a year in dividends. That would be awesome, but for the moment, I don't really have any plans of buying. If it goes to like $350, $340, I would definitely buy some more. Next on the list, we have TakeTwo Interactive, which is a video game publisher, pretty popular. You might know them because of GTA 5 or Red Dead 2 or maybe BioShock or a bunch of different games and franchises they own. I'm just extremely optimistic on the gaming industry in general. Obviously, the pandemic has helped them out a lot for these quarters, and I think this company has a good chance at growing revenues quite dramatically over the coming years, especially when GTA 6 comes out. In terms of what I own, I have 4 shares here, $735 worth, and the average cost was $107. The stock price now is $180, so I gained 67% or $297. So I am very happy with that investment. I'm not in a rush much to buy the stock though. The PE ratio is a little high on this one. It could be kind of overvalued, but hey, it's a great growth stock with a great management team and no debt, so you can't beat that. The next stock on my list is one I'm extremely bullish about. I've made 2 videos about them, and that would be GAN stock. All GAN stock really does is provide technology for casinos to go online and make apps for their businesses. So I really like that business model. I think online gambling is going to be huge in the next decade, so I'm a huge fan of this company. They also just acquired a sports betting company, which is really interesting as well. So now their revenue should be around like $100 million a year, and their market cap's only like $500 million. So that's a pretty good deal in my opinion. So in terms of shares, I own 62 shares, market value of $986. I had an average cost of a little under $20, and the shares are at $16 right now. So obviously I am down 20% or $250. Now I'm not worried about this at all. This is a massive growth stock, and in time this stock will be up like crazy. I already know, if it goes down even further, if it hit like 10 or something, I would go crazy. I would buy a ton of it. But for the moment, I'm okay with it being like 6% of my portfolio. I'm pretty comfortable with that. At most, I would want it to be like 8. Next on my list is Activision Blizzard, and everyone knows them because of Call of Duty. However, they also own a lot of other titles as well. They own Candy Crush, they own World of Warcraft, Overwatch, a ton of stuff. I have 14 shares here today, a market value of $1,140. I bought it at around $55, and now it's worth $81. So I am up $368 or around 47%. If it hits 70, if it hits 65, I would definitely pick up some more. And I don't think I'm going to sell it either. I'm kind of just holding, seeing where this company goes. I think it could reach 100 probably next year or two. The next stock on the list is one everyone knows, regardless if you're into stocks or not, and that would be Facebook. And I actually bought Facebook back in March when the whole pandemic started, and they crashed heavily. I have 6.3 shares, a market value of a little under $2K, an average cost of $184. Now it's worth $278, so I've made $600 or around 50% on my position. Now Facebook is one I would actually buy at these levels. I do not think it's overvalued at all. In fact, it's probably undervalued if anything. The growth is going to be massive in the coming years. I mean, the users are still growing. They own Instagram. There's a bunch of reasons to be bullish on this company. I do want Facebook to be a very big position for me, so I'm probably going to put in like $200 more and get it in my top 3 stocks. Next on the list, we have Alibaba, or the Amazon of China, which is basically just a giant e-commerce platform in China. They own a bunch of different stuff, huge conglomerate, amazing stock in my opinion. I have almost 7 shares, a market value of $1,800, average cost of almost $180. It makes up around 10% of my portfolio, which I'm totally fine with, and the total return for me is $590 or 47%. In my opinion, Alibaba is probably by far one of the most undervalued stocks in the entire market. I mean, this has a PE of like 30, and they're growing revenue at 30%, so just keep that in mind. It is a Chinese stock, so it's a little risky, but I'm a huge believer in it, and over the next 5 years, it should grow massively. The next stock on the list is one that's done terrible for me, quite literally my worst investment ever, and that would be Momo stock. Now, just to give some context, Momo stock is a Chinese dating app, and I got back into this back in 2019 before the pandemic. The pandemic hit in China, then the stock price plummeted. I've been gradually adding to my position as I still think the stock is extremely undervalued. I've made multiple videos on this if you want to go check it out for yourself, but I'm not going to give you a full analysis right here. We're just going to show you the damage that it's done to my portfolio. So I have 142 shares worth around $1,900. I had an average cost of $24. The stock is worth like $14 here today, so that's pretty bad because I'm down $1,500 or 44%. Now, frankly, that's horrible. I do think the stock is going to make a comeback in 2021, which is why I'm holding on to my shares and not selling at the moment. However, we'll see what happens. The next stock on the list is one everyone knows, Amazon stock. I love this stock. Jeff Bezos, you are a god. Amazon stock is one of those companies that seems really overvalued, but if you look at it, it trades at a premium just because it's such a unique, enormous company. So I have 0.64 shares, a market value of $2,000, and I am up $850 or 73% on my position. Now with Amazon stock, I do want a full share, but it's so hard for me to pull the trigger and buy the stock. It just hits new all-time highs like every day, so I don't know. We'll have to see. If it dips down to like 2,800, I would buy a lot of it. Now this next stock is the second biggest in my portfolio, an amazing stock in my opinion, and that is Visa stock. So I have 10 shares, a market value of $2,158, an average cost of $154, and I am up 37% or $587. Visa is one of those stocks that is just going to be good till the end of time, rarely ever dips, super solid, really safe, dividend grower as well, so all amazing all around. Now the pandemic has hurt their revenue in the short term, but obviously I think they're going to rebound. I think 2022 is going to be great for them. So coming up to the final stock here, we have the biggest stock in my portfolio by far, so let's see what it is, and that would be Microsoft stock. So I have 10.5 shares, market value of $2,200, an average cost of $116, and I've made over $1,000 and have an 85% return on the stock. Obviously, there's a ton you can say about Microsoft. I just love their cloud business, along with the fact they own Xbox, Windows, LinkedIn, GitHub, a bunch of different platforms and services you wouldn't even think of. Awesome stock. I'm going to hold it till the end of time. Now, looking at my portfolio, we're going to see how much I'm up over this past year and all time. So for the year, I'm up a little under 5%. So that's a little disappointing. Momo kind of killed me on that one, not going to lie, but hey, it is what it is, right? Overall, I'm only up 3%, which seems really bad, but you have to put some things into context here. You know, it includes when I gambled with options. I made a whole video about that. But basically in 2018, I put all my money on options for this one stock and it didn't work out and I lost a lot of money, which led me to drastic losses, like insane. However, from that bottom point to now, I'm actually up 33%, so it's not quite as bad as it seems. You know, after I burned my portfolio and lost a lot of money, I decided to do things the right way. I bought companies that I believed in, that I trusted, and mainly that I thought would grow my money. And yeah, I just decided to become an actual investor instead of gamble all my money away on options. Obviously, right now it hasn't paid off, but you know, in the coming years, we'll see what happens. Thank you guys so much for watching. Sorry if this video seemed rushed or anything. It's just finals. I'm kind of stressed and I'm all over the place, you know what I mean? But hey, thanks for watching and I love you.